Hey everyone, welcome to another episode of Trading Bitcoin with your host Tone Vase. I got a couple of last minute guests on just before I was going to go live. There is a reason why I'm going live at exactly 2 p.m. Eastern time today, because I was watching something in the market all morning and figured it's a great time to go on. Let's say hi to our guests. We have Tyler Jenks and also Sawcruhteez. So Tyler and Sawcruhteez are writing a book only about hyperwave, or there'll be other TA in the book, guys?
No, just hyperwave, but we are comparing it to Elliott wave and a number of other systems that can be used with it. But it's just hyperwave. It's the history. It's a lot of examples. It's how to use it, how to trade it, all that sort of stuff.
All right, very cool. I'm not going to spend too much time, but everyone's familiar with Tyler's work and his common appearances on my channel. I think this is the first time you're ever on my channel, Sawcruhteez. We met in Vegas because you were there for Unconfiscatable. Tell us something quickly about yourself and how did you discover Tyler? And clearly you fell in love with this hyperwave trading method and you wanted to do more.
Absolutely. Thank you very much for having me on. Very exciting for me. I've been a big fan of yours for quite some time now. And to answer your question about how I found Tyler, that was through watching your channel regularly. And like you said, I really latched on to hyperwave. I'd been studying just basically as much as I could about trading in bubble type markets. And he had the best sort of approach to that environment that I had found. So after watching him through you, I joined his hyperwave Telegram group and have been working with him recently writing the book. So that's been very exciting.
Very cool. And have you utilized hyperwave in actual trading, and has that helped you over the last year or so?
Absolutely. Yeah, I've been focusing on that quite a bit recently. Have been focusing on the Turkish lira over the last about 6 months or so. And the rules of hyperwave have been working just awesomely on it. I have also identified a number of other hyperwaves and individual stocks, myself as well as other people in the hyperwave Telegram group that I've been trading successfully. Amazon's one of the first that comes to mind. It's been pretty picture perfect. We've been in a bit of a muddled environment over the last 6 months or so while we're waiting to see, are these things already having completed their fourth phase, or are they just kind of still establishing the third phase? So over the last few months, been kind of waiting on the sidelines, waiting to see what happens. And here pretty soon, it should be very clear which direction those guys are going.
All right, very cool. All right, I'm gonna go straight to screen share, and I mentioned this in my Telegram group, but for those that have access to the indicator and those that attended my workshops, not exactly like a trade, but it's a setup that I would look for, and that's why I wanted to go live right now, and then we'll talk about the general market. I also want to talk about the flash crash of 2000 and I want to say 2008 or 6, but we're going to go back and revisit that because of what happened in Bitcoin. So here's the 1 hour chart. So last night, as I was coming home from Consensus after a nice day at the Russian sauna, this monstrosity happened where the price of Bitcoin in 2 hours fell from 7,800 all the way down to 6,180 on Bitstamp. Bitfinex didn't suffer as badly, and BitMax got hit pretty hard as well on the derivatives exchange. Now, here's what's interesting to me. Now, the 1 hour chart isn't exactly, the staple of swing trading. However, the 1 hour chart has been flirting with the setup trend line. The setup trend line has been around for like 3 or 4 days. On an hourly chart, that's pretty damn good. So what I'm looking at right here is this is the trend line coming from this 9. It's actually the last 9 we had on the hourly chart, and I'm using Bitstamp. What I find really interesting right here is that we are now, for the second time today, we are actually finally broke the setup trend line. The red 2 went below the red 1, below the setup trend line, but it completed as a reversal candle. We are now falling below prior lows on the hourly chart. We just had we had a new low close that broke the trend line. We just touched a red 2 going below a red 1 on the hourly chart. And this sets up a beautiful short trade right now in Bitcoin. Now, I am not taking the short trade, well, for two reasons. One of the reasons is because I'm sitting here talking about it instead of actually trading it, because that's what I kind of do these days. The other, it's up to you guys, right? This is a tradable setup. You have an hourly chart, red 2 going below a red 1. On the 4-hour chart, you have a red 1 following a red 9, which is a non-tradable candle. However, you have half the time period to go in this candle, just 2 more hours. And if this can close below the setup trend line, and then the next candle is a red 2 going below a red 1 going below the 9, that sets it up for more acceleration to the downside. Now, of course, it has to actually do that, right? So the hourly chart is certainly bearish right now. That can lead to the 4-hour chart giving you a bearish trade as well. The 12-hour chart is still in the middle of its bearish trade, about to close below the moving average. Its setup trend line is all the way at 67. And as you guys know, the daily chart is on a 1 to 4 candle correction. So everything right now is leaning bearish other than the 4-hour neutral, except the weekly chart. The weekly chart is still pretty bullish, but that's an unprecedented run. So right now, things are not looking great. Sawcruhteez, you attended my workshops and stuff. You're familiar with sequential, right?
Yes, absolutely.
Okay. Your thoughts on this, maybe Tyler's thoughts, and then we're gonna talk about something else. I'm very I was really wanted to do for this video.
Yeah, I really like your analysis and agree with pretty much everything that you're saying. One thing that I've been keeping my eye on is the 50 and the 200 moving averages on the 1-hour chart. They're coming in for a death cross with the price under both of them. And I think that that's going to be a really good spot to potentially wait to time the entry, waiting until those either cross or get a little closer. I actually use the exponential moving averages, and they're much closer to crossing than the simple moving averages. So once those do end up crossing, I think that it's going to be a great opportunity to short sell or just sell spot and look to buy back a little bit cheaper. But outside of that, I agree with pretty much everything that you said.
Tyler?
Yeah, I do too. This is very interesting to me because we told our clients to get in at 3 levels, 6,800, 6,500, and 6,300 with limit orders because the price had gotten away from us to the upside. And last night they were all filled. Almost every client now has full 20% positions on the long side. And now what's happening is we're struggling to hold that. So the next call, I've got stops down below the 6,000 level for everybody. But the big question is now exactly what you're pointing out. There has been very little rebound off that red 3 candle, which was just, historic in terms of basically a $2,000 drop over a very short time period, about 3 or 4 hours. And, but it hasn't been able to make any headway on the 4 candle, the 5 candle, and then on the bounce of the 1, 2, 3, 4 green, it's just going sideways, and now it's deteriorating again. So money management, we are in positions. I love our purchase price relative to how high it got up to 8,400. We were patient. We didn't buy. In fact, we had a bunch of people that sold 7,500, 8,200. I didn't tell them to do that, but the move off of the low 6s, was so extreme that some people just took the money and ran in the low 7s. So what I'm saying is now price has given us something else we've got to think about. And what that is do we now cover the longs, or are we patient and we wait till we get down to see if we retest that 6,200 bottom, and then what happens? And right now I'm telling people that that's what we want to do. We have the long-term moving average. My long-term moving average was a 30-week moving average that just turned up a week and a half ago. And that's good enough for me to stay in this trade on the long side because we were patient and waiting for the right price to buy in.
Yeah, so so Tyler, this is where you and I differ greatly on trading. So you had the initial limit order at 6,800 was filled. This is the hourly chart. The initial 6,800 was filled probably like in this vicinity here.
Actually over to the left. We bought it on the way up before we had run all the way up to 8,000.
So you got in here. Okay. So around the 11th.
Exactly. We couldn't get the 66 or 65 or the 63s off, but we did get the 68s. And it wasn't until last night that we got the other ones filled.
Yeah. So this is where my trading strategy is incredibly different. But then again, my trading strategy is a solo strategy, not like you have to prepare your clients ahead of time. I would not have bought on this drop. Now, it's great that your clients got in at 65 and 62, right?
63, 65 and 63.
65. It's great that your clients get in at 65 and 63 on limit orders. I would not have done that because I like to, while I do like buying the dips, I don't buy on the way down. I only buy on the way back up, right? So for me, this would have been very, very scary. And for me, if I had done that, if let's say I left these limit orders on there by accident, I would also take the money and run. I would see that as a gift that this thing did not go all the way to $2,000 yesterday. Yep. And that's me. So that's one of our differences between how I used to trade and occasionally still do, and how you advise your clients. Because for me, right now, I am still anticipating the challenge of the $6,000 low and probably lower. And I personally would hate to see a position this profitable go into the red. That's actually like my rule number 2, to never do that to your portfolio. But I would not have had this position because I would not have bought on this crazy crash unless it went all the way down to 42. There are price limits, right? Your 65 and 63 was advice in an orderly market. In hindsight, if you knew there was a flash crash coming, probably would not have been the same plan, right?
Exactly. And I don't want people to get the impression that we bought as this thing was falling. What we did is those orders had been in on the way up, and we put all three of them, the 68, the 65, the 63. We had some people put 62s that did not get filled, but the 68, the 65, and the 63, the only one that went off was the 68, and we kept those other, they were good till canceled limit orders at the 65 and 63. Following that, we ran all the way up to 84. And then we've been messing around ever since until last night. And since we were a couple of $1,000 above where our buy points were going to be, I told people keep the GTCs in there. Now remember that I was only telling people, and that's all they did, is to take 20% of this trade, even though Consensio says it's 100% long right now. And we're leaving that other 80% powder dry because we expect, as you and I have talked about in public and privately, that the bottom very well might not be in yet. And I'm even more bearish than you are on that. Therefore, we're either going to have Consensio slowly get out of its bullish position with us in a 20% long position against a potential 100% position long. And we've got a close stop, only 10% below all of those purchases. Now, what happens if we get another flash crash, not from this level, but down around the 6,500, 6,000 level, another flash crash? The risk is that when you have limit orders, stop limit orders in, you're not going to get the price you think you are on a flash crash. So what's important to me is what happens now, day by day, hour by hour with the price. If it stabilizes, breaks down the way you just described it, that sequential is saying it is primed to break down lower right here on almost time frames, we'll have to evaluate if we want to simply get out of that 20% even before the stop is hit. But that's too early for me to make that call.
Sawcruhteez, comment?
Yeah, just would say that I'm definitely looking at buying this dip. I had an order set at 6,500 to go ahead and enter about 15% of my desired exposure. And I happened to be on one of the exchanges that didn't get down there. So I was sitting there at my computer as that flash crash was happening and licking my chops, hoping to get filled at the 65. And it just so happened that the exchange I was on pulled up just short of that number. And that was actually something that I was looking at independently. I didn't realize Tyler was buying that level as well. And the reason that I was looking at it was because of a trend line that I've been keeping my eye on. I'm not sure if you are able to see it, but essentially starting back in April, right at the end of April, kind of looking on the 4-hour chart, we see once it really kind of started moving up, there is a bit of a trend line that can be drawn. Let's see here. Yeah, so basically there from April, the end of it connecting to when it started accelerating through May. So mine is April 29th through May, and it actually caught the bottom of that wick. I'm looking at BitMEX, so this might be different on Bitstamp, but essentially that trend line caught the bottom of that wick from the flash crash just perfectly. So when I am looking at, yeah, it is a little different on Bitstamp, but it was just perfectly on BitMEX. So when I'm looking at buying dips, I'm more on Tyler's side of the fence where I'm absolutely willing to buy as it's coming to me. And I like to lay it kind of dollar cost average and layer bids. And the further it comes down, the bigger the position I like to add to improve my cost basis. And the two ways that I like doing that the best are with trend lines and with moving averages. And I really like the 4-hour chart. The 4-hour chart using the 50 and 200 EMAs. Anytime I see those in line with a bullish trend line or above in line with a bearish trend line, those are where I view as really good spots to enter, very low risk. So in this situation, we have the 200 EMA right below that trend line on the 4-hour chart and the 50 right above that on the 4-hour chart. So anytime I see that sort of support cluster and the price dipping into it, I view it as a really good opportunity to buy. So my plan was to buy the buy at the 200 EMA on the 4 hour, and then to add if we made it down to the 200 EMA on the daily, which is waiting around $5,000. So anytime we're testing those moving averages while they're in a bullish posture, telling me we're in a bull market, that's where I like to layer my bids. And then I will generally not leave a stop loss order on the books in the event that a wick just kind of spikes down and wipes everybody out. Instead, what I'll do is I'll hold on, and I will basically just hold on, and my stop loss will be a bearish crossover with the EMAs. If the 4 hour EMAs get a death cross with the 50 and 200, then I'll scale out about 50%. And then if the daily does the same, then I will scale out again. So essentially I'm looking at buying this thing all the way down to 5,000. And as long as those EMAs are staying in a bullish posture, I'm going to be holding on. And we'll be kind of trimming, taking partial profit. Kind of like you said, if my order at 65 would have filled yesterday, I would be viewing it as such a gift to be up 10, 15% in the matter of an hour that I'd probably take 20 to 30% off the table so that I could try to lock in some profit there and make sure that I'm not going to lose any money on the deal. Because that is one of the most important things to me as well is A, getting safe entries, and then B, not having winners become losers.
Yeah, no, thanks for that. But like I said earlier, my trading strategies have always been the opposite of that. I would not be buying on the way down. I would wait and see when the down ends. So I'm actually waiting for this. I actually think we are going to go down, and I think we're going to go sub 6,000 on this one. We will see if I'm right. We will see if buying above 6,000, I even think we're going to go below 5,000 as well. I made a little bet that we're going to go under 4,500 during consensus. So we will see if I'm right on that bet. So I would personally am very hesitant buying on the way down. And right now, I don't like the way the 1 hour chart is shaping out. This is the 4 hour chart. I don't like the way the 4 hour chart is shaping out either. The 4 hour chart can still rebound, but I don't like this red 2 going below red 1. We already broke setup trend. This blue line is very, very critical. This is the last swing low. If we go below 6,900, I think Bitcoin can drop quickly to retest the prior. I'm going to call this a flash crash. It has all of the
absolutely
flash crash, and I want to go and revisit the 2010 flash crash in the S&P unless you guys have anything else to comment on Bitcoin.
No, that's great.
Looking great.
All right, let's go to the S&P and let's go and take a look. So I'm gonna do this. I'm gonna do that. It's the daily S&P. And let's go and take a look at that flash crash. It was May 6th, 2010. Oh, right around this time. Nice.
Yeah, perfect.
I remember that day. I was still working at JP Morgan at the time.
It's probably the same guy, Fat Finger.
So that's the thing. I thought the Fat Finger was bullshit. I called it bullshit at the time too. Oh, this is the weekly chart. I need a daily chart.
I actually know the guy. He's 480 pounds and his hands are like boxing gloves. Yeah, that's the weekly. There we go.
There it is. Oh no, this is the current environment. Hold on. Okay. So that's May 17th. Here is the May 6th flash crash. And at the time, this is long before I was making videos. I was just, talking shit at JP Morgan, how I'm going to be a trader one day. And if you notice, it's actually not that different from how Bitcoin looks, right? Here is that daily flash crash. The red 2 went below the red 1 on a prior candle and broke setup trend. Well, closed right at setup trend. The next candle was the big flash crash candle. notice how it is a reversal candle, but as the body is still smaller than the shadow. And here is what I said back then and what I'm saying now, and I sent that in a tweet yesterday and last night, and I talked about it late last night in my video. This down move would have happened anyway, and I know this for a fact, because within weeks, we had lower lows, and we had a nice buying opportunity off the sequential. I was just learning the sequential at the time. Didn't even trust it yet. And then we went lower still, and again, we're able to pick it up off sequential. Now, eventually, this thing went to the upside. But what I'm saying is, the reason why I'm very hesitant about having my limit orders filled on this flash crash, even though it came out of nowhere, is that on 1, 2, and 3 separate occasions, there were lower lows to buy the S&P. Now, I would never try to get filled at the flash crash. Now, if I had, I would have been exiting right here. I would have taken that profit and ran. Now, where am I interested in buying into this asset? I am interested in buying into this asset right here on a 9 as it goes above a hammer reversal candle. That is my perfect buying opportunity. Did this perfect buying opportunity lead to a Lambo? The answer is absolutely not. It made a little bit of a high and then came down and made a lower low. Maybe not intraday, but certainly on the close. So what this means is my perfect trade, if I'm lucky, my perfect trade bought me a cup of coffee. If I'm lucky, I raised my stop loss to just above break even, and I got stopped out. Now, the next opportunity for me to buy this asset wasn't at the low. This was beautiful. By the way, I didn't look at this before. This is not like premeditated. I had no idea sequential was going to line up like this. So this is not a buying opportunity for me, okay? This is a buying opportunity that failed into a good trade, but it didn't lose me much money, if at all. Right here, there is no 9 sequential, and we're actually trading at the lows. Right here, I would rather be short than long. Probably not going to short it at this point. More interested in shorting in this area like I am right now with Bitcoin. The next buying opportunity, and I can mark it. You know what? I'll mark the buying opportunities. The next buying opportunity for me, based on the first one, is here. Obviously, a failed trade. Not a bad fail, but you're out of this trade on a stop loss. The next opportunity for me to get in after a flash crash is right here. That's when a green 2 is going above a green 1. After yet a new low, I keep looking for new ones. And I am very confident in this trade once we start trading above the swing high there. When this candle kicks off, it's an 8 looking to maybe take an exit on a 9, but it flips on me. So sometime on this red 2, I am now exiting this trade because there's no way in hell I'm going to turn a profitable trade for 1, 2, 3, 4, 5, 6, 7 days into a loser. So I'm taking my profit, and now I may or may not short. Ideally, I want to short below the swing low, but below the swing low is not giving me a red 2 below a red 1. Below the swing low is the end of the daily sequential. So my next beautiful buying opportunity is here. It is off this 9. It can actually be on the 9 itself because it happens to be a reversal candle. It's debatable if the next candle is trading above it. So if it's not, you can get in on a red 2. You can get in on a red 1. It doesn't matter. This is where I want to get in. I got a reversal candle. I got a new swing low. I got a hammer, and now I am into the trade. And look what the S&P 500 did afterwards. That is a buying opportunity, and guess what? Another 9 right here at this low. with a 13 right there. So these are your buying opportunity. Now, the point here is not to shill the sequential, which I'm happy to do because it lined up so perfectly. Did it give you good profit takes? Absolutely not. But it gave you amazing entries all throughout. My point is this. To me, what just happened in Bitcoin is this candle. And if you compare, and I understand that Bitcoin is not the S&P 500. You guys don't have to remind me of that. But there were 3 subsequent lows for better buying opportunity than the low of the flash crash. And that's what I will be looking for on this correction. That's my rant. Tyler, I guess we'll let you go next on everything I just said.
Yeah, that's the proper way to play, particularly, it depends on when a flash crash takes place. If you could just switch that to the weekly for a second.
Sure. If I switch it to a weekly, I just have to back up. That's fine. Let me get a 1W and go to there. So I believe that is the week of May 3rd, and that is the week of May 10th. Yes. So this happened. Wow. So on a weekly scale, the 9 got you out of this trade. So that's beautiful, and it happened on a price flip candle.
Yeah, exactly. Now this is at the end of a bull market. Excuse me, the end of a bear market. So the bear market ended in the spring of 2009, and I was out of that entire move down in the S&P. Using mainly Consensio, but also some other things. So as we go into the low of 2009, I have got zero. My clients from 07 until that bottom in 09 had no exposure to the stock market. So now the question is, where is it that I want to get into the stock market? Not getting out, but getting into it. And we had a good run from April of 2009 all the way up to that peak a year later in 2010, April of 2010. And along the way, notice that there are 1, 2, 3, 4 nines on the way up. Now, as we were going up, I was not in the market. And the reason I wasn't in the market is I had just outperformed the S&P by 50 basis points. Excuse me, 50 percentage points, because we had no losses and the NASDAQ was down 80% and the S&P 500 was down 34%. And a bunch of the other indexes, mid cap, small cap, Russell, were down between 35% and 70%. And we had no losses. So I'm sitting with unbelievably happy clients. The last thing in the world I want to do is to get into a bull market until it gives me all the signals I need, just the way I did on Bitcoin just now. On Bitcoin, we doubled from 3,000 to 6,000 before I was interested in getting in. And a lot of the trolls are saying, Tone, why didn't you get in earlier? Tyler, why didn't you get in earlier? And that's what I'm trying to explain now.
Oh, sorry, Tyler. This is also a doubling. S&P bottomed in the 600s, and this is about 1,200.
Exactly. And so what we were doing on that move up is just like what I'm doing on Bitcoin, is when we took out each of the previous peaks, if you just scroll a little over to the left past the bottom, yeah, when we took out each individual peak, and Sawcruhteez is an expert at doing this. but I did the same sort of thing. I put in incremental amounts of money, 10%, 15%, 20% using Consensio. Off of this bottom, I don't know if you've got time, but if you just put on this chart that 2, 7, and 30 week, you'll see exactly where and why I entered from a bull market, from a bear market into a bull market. And the only reason I'm bringing this up now is so we can look at why this flash crash is different than the one that we're looking at with the S&P. The flash crash that we just had last night in Bitcoin, I see as different because we have just moved from, according to Consensio, a bear market into a bull market. Now, here's the same thing looking at the S&P. The reason I use that gold 2 week, which
right. So just the gold on my chart is a 4 week.
Yeah, that's fine. That's fine.
But it's smaller than a 7. Yeah.
Exactly. So what you have is until the long term, which is the blue moving average, moves up, I'm not interested. But what starts happening right off the bottom is the very short term quickly catches up with price. That's what it's designed to do. My short term is designed to run through the middle of all candles. I don't want any candles above it or below it. That's the canary in the coal mine. And so off the bottom, within the first 2 or 3 weeks off that bottom, the gold is turned up and it crosses through the intermediate, the purple, and then they both cross in early May through the long-term moving average. Now, as long as price stays above that long-term moving average, goes sideways, which is what it did for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks. Halfway through that, I knew that the long-term moving average was turning up. You can do the calculation yourself. But the important thing is I wouldn't put clients' money in this until that blue line turned up, and then I only put a small amount. Even though Consensio is saying you should be 100% in the early summer of 2009, I only put in 20%. And then as each of the next highs are taken out, the green 3 in June, all the way up to the final 9 in the beginning of 2010, and that sideways action in September and November, as we finally broke above those consolidation highs, I added more money. And I was perfectly happy to do that, knowing that I was falling further and further behind the S&P in this bullish move. I don't care. You asked last night, I listened to your midnight show last night at 3 o'clock in the morning because I had no idea what was going on. I woke up because I heard a noise. I saw that Bitcoin was doing crazy things. And then I saw you had already reported on it. I listened to that and you asked a question about, you're not sure, you were talking about not apologizing to the trolls. And you said there's no need to apologize. And then you said the only reason Tyler should ever have to apologize if he lags his benchmark. And you said, I'm not sure what his benchmark is, but it's probably the S&P 500. It is not. It was when I was an institutional trader, but when I started just working with individuals, my target is 0. I don't ever want to lose 10% more than 0. And I am perfectly happy to make a 6% return when the S&P is up 15%. And the reason for that is what I just explained about the down market. I make an enormous advantage over any index in down markets because an index never gets out. An index is frozen to always being 100% invested, and I don't have to be. So if I can get out 10 to 15% from a top, I will beat the S&P by 75 or 80 percentage points before it gets to the bottom. Therefore, I've got a tremendous cachet built up that I don't have to risk clients' money at the beginning of the next bull market. Now, if I wait too long, people get upset. And therefore, I use Consensio to make sure as long as Consensio is going up, I'm going to be 100% in. Same thing with Bitcoin today. Because I wasn't in Bitcoin from 17,000 all the way down to 3,000, and none of the clients that listen to me, and I'm not saying that all clients listen to me, I'm just saying those where I have discretion have to listen to me. Those that are consulting clients can make up their own decisions. Sawcruhteez is a consulting client, but he's often doing things that I wouldn't be doing because he knows a lot about what he's doing and he experiments and all that sort of stuff. So anyway, that's my point. And you and I, Tone, are very different on that, mainly because of my background. In my background, when I had to go up against the S&P, I couldn't raise cash because institutions wouldn't let me. Therefore, I couldn't use the techniques I'm now using. And that's why I finally retired, because it was so stupid to watch these big pension funds lose hundreds of millions of dollars because they make you stay in the indexes. And I finally realized I don't want any more of that. I want to be able to do what hedge funds called absolute returns. Absolute returns mean you try to always make some money. And you have no targets other than you don't want to lose, you don't want to drop below zero.
I know that's great, Tyler. Sawcruhteez, your thoughts on what I described on the daily S&P during the May 6th flash crash that I said at the time is not some bug, it's not some fat finger. It was fully legitimate. And the price action over the following month proved it. It needed a pullback.
Yeah, that is a great analysis and a good kind of metaphor for what we're seeing now. I definitely do agree with you in the sense that you do not want to be trying to catch knives and to really trying to like time these flash crashes or trying to catch the bottom of every single wick. That is absolutely not what you should be trying to do, basically, ever. But some people do have a strategy where they're okay with leaving limit orders on the books and getting that filled, whether it be a flash crash or a more gradual move down. So that is kind of the position that I'm in, being comfortable, basically kind of catching knives in a sense, but not necessarily trying to, just more dollar cost averaging into a dip. And there is one thing that I think is very important to clarify, and that is the time horizon that you're trading. For the most part, I'm a swing trader. I try to take advantage of the little swings that if we're going up or down $1,000, I want to be taking advantage of that move. That represents a very lucrative opportunity if I'm able to get on the right side of that. So primarily I'm a swing trader. However, if I determine that there's a bull market in Bitcoin, then I'm absolutely going to buy and hold Bitcoin and try to hold it throughout the duration of the bull market more as an investor. So those are two different kind of strategies and two different game plans. When I'm swing trading and I'm at my computer, ready to move in and out, then I'm absolutely loving the opportunity to kind of get in on these big flash crashes. Like Tone showed, it doesn't necessarily indicate the eventual bottom. The price will often come down and kind of re-explore the wick in a more less volatile environment where there's more liquidity to try to explore that price. And when that happens, it will often go even lower than the bottom of that wick. So in that case, I'm perfectly okay with that because kind of like I said, I would be catching it, say I got it a fill at 65 yesterday. Well, I'm going to be scaling out 20, maybe 33% after it spikes almost 10% in my favor. So now I'm moving out 25, 33%, and then I'm probably going to set a break-even stop loss. If this is a swing trade, I'm going to take a little bit of profit and I'm going to set a break-even stop loss. So if what Tone shows ends up happening, like we saw in the S&P, where it provides multiple better buying opportunities off red nines at kind of horizontal levels of support, well, I'm going to be able to buy those as well, because I made a little bit of profit on that first purchase. I scaled out and then it got stopped out at break even. So now I'm ready to re-enter. And now I'm also able to kind of buy those nines and buy those reversals that Tone was pointing out. And something else that I find very, very helpful when trying to wait for a little confirmation that the dip, that the spike down is now ready to move back up, is Bill Williams fractal. That is a pretty simple candlestick pattern where you basically have, if it's going to be a reversal, dip and then going back up, you'd have a low and then two candles on the side that are higher than this low. And then the full Bill Williams will have two candles on either side of that that are also higher than this. I only need these three little things. So if I see a low, a spike down here, a high on this side, and then a high on this side, to me, that candle is a really good opportunity to buy. If perhaps I was expecting it to come a little lower, or perhaps I'm wanting to wait for more confirmation to buy into a longer term position, then I will, instead of having limit orders set on the books, wait until a fractal forms after a counter trend correction. And I find that to be a really good confirmation to wait for. So I definitely like your analysis and fully agree. I really believe in the quote from Jesse Livermore that is one of the most expensive things that anybody can learn is to give up trying to catch the last eighth or the first eighth. These are the two most expensive eighths in the world. And I think that right now is just a tremendous learning opportunity for anybody who is following along with Tone or Tyler, watching how they navigate their way through these tremendously volatile markets, like we're seeing with Bitcoin right now, and like we're also seeing in the S&P 500. These are providing such tremendous learning opportunities when we get into these environments that are extremely volatile and extremely uncertain. Watching how these experts rely on their technical tools to guide them, sort of like a flashlight through the night where everybody else can't see anything. They're stuck in the night. We've got some people that are showing us how to navigate through the minefield that is phase 7 of a hyperwave, or potentially the top of the S&P. However you're looking at it, just learn and realize what a tremendous opportunity this is. If these were boring linear markets that were doing very common things, there wouldn't be much learning opportunity, but that couldn't be further from the truth right now. Right now is the best opportunity to learn and to see which tools work the best. So in terms of trying to buy a dip, I definitely am not trying to catch that bottom eighth, and same goes for the full reversal of the bear market into a bull. That's where I think both Tyler and Tone are extremely talented, is knowing when are you still in the eighths that you need to avoid. That can be a tremendously difficult lesson to learn, and you couldn't have any better teachers than the two that are guiding you right now.
Hey, thanks for all that, Sawcruhteez. All right, I'm going to recap, guys. Didn't want to keep the show on too long. I just wanted to show a current environment that the hourly right now is bearish with a red 2 going below a red 1, breaking setup trend. You have one more hurdle, this vicinity here of the prior swing low in the upper 6,000 area. And if that cracks, there's really no support whatsoever other than going back to like the $4,200 area. Maybe a little bit of support in the high 5/8 on the hourly chart. The 4-hour chart is hanging in there, but if the next candle is a red 2 going below a red 1, breaking setup trend, following a red 9, I mean, that is terrible. And your next level of support becomes the long-term moving average on a 4-hour, which is under $6,000. Your 12-hour chart is in a bearish posture with a red 4 sitting here at the moving average, and your daily is currently on a 1 to 4 candle pullback right in the middle of it. The weekly is still pretty bullish, but all the other time frames are not looking good. We compared this current environment to the flash crash of the S&P 500 in 2010. You can go and read more about it. I said it at the time, though there's no video of it, and I'm saying it now. The guy they eventually arrested for causing it was complete and utter bullshit. Now, there was another quick comment I want to mention. Someone's just said, hey, Tone, if this flash crash was bullshit, why is Bitstamp investigating the big sale that caused the drop? Well, I don't know why. The only reason to investigate the big sale that caused the drop is if that sale took place just before the news that the New York AG is doing something else to Bitfinex, right? So if this trade took place on some kind of insider information, that's the only thing worth investigating. Now, I will say that if I was the one that made that trade, and let's be clear, I wasn't. If I was the one that made that trade, I would basically tell Bitstamp and the SEC to go to hell because there's no laws on insider information in relation to the price of Bitcoin. They don't exist. Just like there are no laws in relation to currency trading. There's no such thing as insider information in a currency market. There's no insider information in this, right? So while it may look bad, unless you want to put in a law saying you're not allowed to trade Bitcoin on insider information, there was nothing wrong there. If some whale wants to immediately sell 20,000 Bitcoin and crash the price, 80% in 1 hour, show me a law that says they can't. Now, you can try and have fail safes in your exchange to make sure you don't let him do that. But now it's not exactly a free market now, is it? Because then everyone is screaming, I want a free market. So either you want to trade on now as an exchange, you want to make that clear. Hey, we do not want a flash crash, but it better work both ways, right? If someone wants to buy 20,000 Bitcoin in a market order, well, you better have the same fail safe the other way around now, don't you? So again, I don't have a problem with capitalism. I don't have a problem with a rich guy selling a lot of Bitcoin or buying a lot of Bitcoin because there's a richer guy out there that can wreck him. So I don't have a problem with it. There may be, everyone has insider information in the Bitcoin market, but that's not illegal. There's nothing wrong with that. So go ahead and use it. Tyler?
Great. I think those are all very important points. What I was thinking last night as I was trying to figure out what was going on is, what do outsiders think about this? They've seen flash crashes in the stock market. We've seen all kinds of these kind of wild moves in the crypto market. But those institutions that have been moving closer and closer to maybe doing something, maybe not doing something, I'm still convinced that they are very wary of the infrastructure of these unregulated exchanges and the ability to move money. And of course, Bitfinex and Tether have got their own problems, as did Quadriga, and on and on and on and on. And we are not the only people, the ones in the ecosystem, that know that. When something like this happens, it's been all over CNBC today. It's going to be in Barron's. It's going to be in Business Week. It's going to be in Investment Business Daily. And the only reason that's important is for the bulls that are looking for all these moons to come. We just continue to caution that there's got to be a lot of cleanup within the space before that can happen, which is one reason I still keep a 20% probability that the lows have been hit. And I know I'm the only one out there that remains that bearish. And a lot of people have been asking, well, then why the heck are you buying for your clients Bitcoin? And I think I've answered that in the last 2 or 3 days because of Consensio, which is a very powerful tool. It's simply at odds at this point with Hyperwave. And as long as they are at odds, I'm going to go with the one that is always giving signals, and that's not hyperwave. I can't do anything with my observations on hyperwave over the last 40 years that tells me it's got to get back to the bottom. I can't argue with what I have seen, and therefore I must respect hyperwave's potential of much, much lower prices. That doesn't mean I'm blind to the reality of price movement. And that's why we took the trades that we did where we did.
All right, I want to go ahead and leave it here, but big news announcement for you guys on this YouTube channel. Monday, we will have a debate / fireside chat conversation. I will be moderating a discussion between Peter Schiff and Saifuddin Ammous.
Wow, fabulous.
That's awesome.
Sound banking, sound money, and whatever else they want to discuss. So Monday afternoon, US time, we will have Saifuddin and Peter Schiff on this channel. It's going to be great. We will start promoting.
Congratulations, Tom. That's huge. That's what all the outsiders need, is to hear that debate.
Yeah. Oh, and I'm going to stop the screen share. 1 second. I'll actually make it a speaker view. And so what I want to do is, where are the books? Oh, wait. Here it is. Shout out to the Bitcoin Rabbi. I'm still wearing my gym shorts. I literally got back from the gym, and I haven't had a chance to do anything because of this market. So here, I want to do a shout out to Bitcoin Rabbi right there. Thank you for this book right here. And thank you for signing it. And then I have Jimmy's book up there, and also Ron Paul. Ron Paul as well. I got some signed books. So there you go, guys.
Terrific. That's great news, Tom.
All right. On this note, we're going to go ahead and end it. And I will see you all on the next one. Thanks for joining me, Sawcruhteez.
Thank you for having me. Much appreciated.
Great. Thank you.